When building multiple models, it's always important to make sure that the numbers seamlessly go together. So that's what we'll have a look into here. And we will make sure that the numbers from the integrated business plan and the short-term liquidity model really align. So let's use this table here on the right-hand side and check for each of the items if this is the case. So here in the liquidity plan up here we have those booked receivables, and as you can see these add up to some 5.58k. And when you go over to the business plan, you have this column for the end of 2023, and here we have those trade receivables also of some 5.6k. The next thing we should check are those booked payables. So here we need to make sure to get all of these. This is some 5.9k. And also when we go here in the business plan, we can find those, well, actually down here with the same year column. So here those 5.9k. Next we have the cash and equivalents. So that's further implicitly included in here. So let me go back here. This 726.8, well, we have that in the business plan in the cash. So this is, well, here. It's the closing balance for 2023 and also the, well, opening balance of 2024 over here. Note that this is on an annual base. So here we have months, but here this is on an annual base. So this closing balance from the end of 2023 is also the opening balance of the next year. Let's see what else we get. We get this here. This is the overdraft facility. So minus 2.2k. And when we go to the business plan, we can see that here in the current accounts, here at the end of 2023, 2.2k. And finally, we have the bank loans. So in the liquidity plan, this is the sum of these two, so minus 3.8k. And note that just as here for the overdraft facility, this is inverted in the business plan because these are balance sheet accounts, so they don't come with negative numbers. And here we have those 3.8k. Now, one last addition. We just built this liquidity tab here. And as you can see, there's this cross-reference to the liquidity plan in here. So as is mentioned here, the 36 on the OLIC tab in the other model is linking to that cell. So let me just go there. This is here, these minus 1.5k. And well, to make a bit more sense of that, let's look at that chart. So here this starts with those minus 1.6 million at the end of 2023 on that December 29th. And over here, we are working with the December 31st as a starting date. But here this should make a difference. The reason for that is the liquidity model is always as of Friday EOB. So let me just open the calendar for a second. Here we have December 2023, and here we have Friday the 29th. So this is why the liquidity model is starting there. But for the integrated business plan, it's just that we're working with end of month dates, and this is why we're using the 31st of December here in this case. But technically they are supposed to integrate the same numbers. And that's why we have this minus 1.5 million over here for this date here. And when you look at the chart, you will see this minus 1.6 and here this minus 1.5. And the reason for that is, well, here we already consider this cash balance. So this is not something that is considered in the integrated business plan, because the integrated business plan, well, it's not on a weekly base, and the logic is just a bit more geared towards a monthly perspective, and that's why this is not accounted for here. And now that we've linked the integrated business plan to the short-term liquidity model, let me also just link this to the financial status, because this again is a different perspective. So the difference really between the short-term liquidity plan and the financial status is the way that we account for the overdraft facility. So here you can see those minus 3.2 million. So we show the overdraft facility as such that is available in total. And in here we account for those minus 2.2 million that we already took out. And here we directly show the difference between those two values. So it's showing the same thing, it's just two different perspectives. For the cash, we have those 726 in here. And these are also accounted for in here, so here they come. And then it's just a different way of looking into this overdraft facility. So also another way to link those is to have a look into these 1.7 million, which are called available liquidity here. And you get those if you take this value here, which is just, let me just calculate that, this here, and then we need to subtract, well, this, which is the difference between this here and this here. And that then gives us this here. And well, now I could even move on and subtract this here. So this would give me just 0, and that's the way these numbers are linked. When I scroll up a little bit, you can see those line items up here and down here. So for cash in and cash out. And these are coming from the integrated business plan. So this is something I covered in the short-term liquidity planning videos, but here just as a short reminder. So these are coming from the integrated business plan. Here we can see the base plan. I'm using this tab as an input. You could as well use the base case or management case. Usually it makes sense though to at first go with something that's conservative. So I would suggest you start with the base plan. And then if it makes sense, you can move on to the base case, for example. But the reason I do it like this here is I want to be conservative. And well, this here as an input tab is just a value copy of the base plan. As I explained in the other video series, we need to transform this from the monthly timeline to the weekly timeline, which is happening here. We also need to get some other stuff, which is not directly coming from this tab, but it's all explained in the other video series. And then we can integrate it here. So this then completes our short-term liquidity and shows the way that integrated business plan and short-term liquidity are linked.